Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with the weekly news again. And the only man that brings us the news is, of course, Nick Bendel. Hello, Nick.
Hello, Owen. Always great to join you. Are you feeling better than last week?
I am feeling better. The voice is still a little croaky, but I don't think I'll potentially lose my voice today. So, yeah, it's hopefully next week it'll be right as rain again.
Okay, well, I'm glad to hear you're feeling better. Did you get up to anything interesting, whether personally or with your business, Leifield, over the past week?
Lots of good things. Probably internally in the business where it's that time of year after end of financial year where I always try to look at reviewing processes and procedures. It's pretty soon I'll also be able to I should be able to officially announce that we're moving into the short-term property management market. So that's for your holiday and corporate short-term rentals.
And I'm guessing that this is going to be an ongoing part of your business, so you're going to have a long-term commitment to short-term accommodation.
Exactly. You said that well.
Yeah, I should be a writer.
Yeah, you should be. Yeah, have a think about that. Yeah, so that's probably the big news of the week. We haven't officially launched with it, but it's definitely a decision that we've made. So stay tuned for the official announcement of when we can start accepting, hopefully within the next few weeks. But we'll be able to do that Australia-wide as well. So in all the areas that we currently operate.
Well, fantastic. That is really, really exciting to hear.
Yes, I saved that one for when we hit record. But how about you, Nick? Yeah, anything new and interesting in the past week?
Well, speaking of writing, I own a content writing business called Hunter and Scribe. We write content for finance and property businesses throughout Australia. And over the past week, we signed two interesting new clients, a mid-tier accounting firm and a lawyer that specializes in construction. Looking forward to working with both of them.
Very good, very good. It's good to see that you're getting more clients and you're getting more variety these days too, it sounds like.
Well, I would say the client base is still about 80% mortgage brokers, which I love. In fact, that's how we met back in 2014, back during your mortgage broking days. I've been writing, covering mortgage broking and writing for brokers since 2014. Love brokers, and the other 20% of the business is a mix of other professions like the ones I just mentioned. There's accountants, there's builders, there's lawyers who work with builders, there's conveyancers, real estate agents, buyers agents, financial advisors, lenders, and credit repair agencies. They're all wonderful to work for.
There you go. Well, at least you tell us about all the new variety. But mortgage brokers are always welcome.
We love our brokers, and that is a very nice segue into our first story today.
It is actually, yeah. What's in the news?
Our first story, most borrowers sticking with high repayments. New research from Commonwealth Bank found most borrowers are sticking with high repayments despite 2 rate cuts this year. CBA said that about 10% of eligible borrowers reduced their mortgage repayments after the February rate cut, and then another 10% after the May rate cut. Those who did reduce their repayments could be saving around $160 per month on a $500,000 loan, according to CBA's modelling. But most borrowers are choosing to keep their repayments high, a strategy that can help people get ahead on their mortgage. Owen, we previously discussed how one reason some borrowers are remaining on high repayments is that they're unaware they can switch to low repayments. But could that ignorance actually be a good thing?
Well, it's not a bad thing, but if people really need to save on that cash flow, which there obviously are people out there, because a lot of people been suffering from mortgage stress, then it would be nice that if the banks could actually alert them to the fact that their repayments haven't automatically lowered. Even though their interest portion has lowered, their repayment amount hasn't. So it's so that's a good thing because there's more principal being paid off, which is what you're alluding to, and that's not a bad thing. But it's and maybe if people can call on it, if they're more aware of it, I think education is the key here. And most people have a set and forget mentality when it comes to their mortgage. They set it up and they don't really pay attention to what interest rate they're on. Thereafter, what their repayments are. They might hear about rates in the news going up or down. They just don't really change.
Well, speaking of our mortgage broker friends, you're right. Most people do sit and forget their mortgages. That gives our broker friends an opportunity to proactively contact their clients and educate them on how the market has moved since they took out their loan and potentially speak to them about refinancing as well.
Absolutely.
And I also wanted to ask, so we talked about some borrowers remaining on high repayments because they're unaware they can switch to low repayments. But I'm guessing some borrowers have also consciously chosen to remain with high repayments. And I'm wondering, with those borrowers, do you think it's a case of once bitten, twice shy? What I mean by that is during the pandemic, when rates fell to record low levels, perhaps some borrowers reduced their repayments and then got burned when rates got jacked up again. So could some borrowers now be thinking, I'm going to keep making repayments at that higher level, no matter what the RBA does?
To be honest, it'd be good to see what the stats were, if they're actually published, of how many people did actually officially drop their repayments. There's probably a higher number of people that went on a repayment holiday, which was allowed, during that time. People would be more motivated to have no repayments for 6 months than to actually just reduce it by maybe an extra $50 or $100 a month.
What do you think of the strategy of assuming or pretending that interest rates were, say, 8%, and maybe you're only getting charged 5.5%, and then the 2.5 percentage point difference you pay into an offset account, so that you're always covered no matter what happens with rates?
Probably complicating the matter for most people, and that would probably put the onus on the banks to actually action it on behalf of the borrower, it's I don't have a problem with the current setup of what automatically happens, because at least there's a benefit to the borrower in some way.
Our second story today is rental market hits affordability ceiling. New data from Domain suggests Australia's rental market is finally slowing after years of relentless growth. During the June quarter, house rents were unchanged for the fourth straight quarter, the first time this has happened since 2019. Capital city unit rents were also unchanged in the June quarter. Domain Chief of Research and Economics Nicola Powell said renters were reaching their limits. Renters are maxed out and landlords are being forced to hold steady, she said. We're also seeing a shift in demand. Renters are downsizing or choosing units to stretch their budgets. Nevertheless, house rents are at record levels in 7 capital cities, and unit rents are at record levels in all 8 capitals. So, Owen, your property management business, Leifield, is active in 5 states. Does this Domain data match what you're seeing on the ground?
When you take it across the board, yes, absolutely. There are still markets that are increasing, but there's probably double the number of markets where we're seeing slight decreases, there's quite a few that are holding steady. So it's yeah, it's not surprising. I've been calling this for at least I mean, we saw it happening in some markets 12 months ago. And but yeah, this calendar year so far, yes, we've been seeing it across the board. And when we've had some properties that haven't had increases for more than 12 months, where they can still have some modest increases, then increases are still happening, but not necessarily ones that are uh, less than 12 months old coming back on the market again. So, but it's very dependent on the specific market. So from suburb to suburb, and from capital city to state to state. So it's varied.
You made a really good point a moment ago. When we look at this data, any kind of property data, it's generally at a national level or a capital city level. Of course, so real estate is very much a local game, and what's happening at a local level may be different to what's happening at a capital city level or a state level or a national level. Again, looking at this capital city level that Domain's looking at. So Domain is reporting that rents have stopped going up, but they haven't started going down. Do you
Across
think
the board? No, yeah.
No. Do you think they will start falling across the board?
There might be slight falls, and I think it will be driven by individual markets as supply comes on in those individual markets. And yes, and then if there's enough of those happening in any one capital city, then yeah, that could start bringing down the average across the board. And it's in some areas I think there could be room for that happening, but other areas there's still room for growth. And the number one thing that affects it is, to say it for the 400 millionth time, it's supply and demand.
Okay, well, in this kind of market, Owen, where affordability is stretched and we're not seeing rents grow like they have in the past, what can investors do to maximize their rental income?
The first thing is to make sure that if they've got a current tenant in place, to make sure it's at market rent. That can definitely affect your rental returns. That's the number one thing. Secondly, it's if the property comes up for lease again, it's making sure that all of your repairs and maintenance is up to date as well. Now, that won't necessarily get you higher rent, because a 4-bedroom house with a double garage is going to rent for pretty much the same as the one next door. But what will determine which one gets leased first is if all of the repairs and maintenance are up to date. Has it got things like air conditioning, a dishwasher, and all those things that a tenant will always like to have. And if you've got more choice of tenants, it means you can have your choice of the best tenant, and get one as soon as possible. But apart from that, what's very popular with a lot of investors and a lot of good buyers agents are doing for investors is getting into dual occupancy properties, where the rents are higher. Basically, you've got a minimum of 2 incomes off the one property. You usually, in most cases, you can't subdivide and sort of sell them off, but you've got the house and the granny flat, or a purpose-built dwelling that's got a 3-bedroom dwelling on one side, 3-bedroom house, and then you've got the flat attached to the same dwelling. all under the one roof, but you got the one or the two bedroom down the side, and so it's they're very popular, but yeah, that ranges from state to state and council to council of what's allowed. So that's where you need a good buyer's agent to find you one like that. And apart from that, if you're an experienced investor and you've got a good asset base behind you, the next option is to look at and consider is commercial.
Okay, going back to the dual occupancy that you mentioned a moment ago.
Yep.
If you compare one of those properties to a regular property with just one home on it, what does a typical dual occupancy get in terms of rent? Are you looking at, say, 130% of a typical property, 140, 150?
Yeah, quite possibly. Maybe to give you an example, there was we've had a number of properties in the Hunter Valley in New South Wales come on, and dual occupancies are quite popular in that area, in that region. And on the same, if you had a standard, say four bedroom house on that same block of land, you would be probably looking at about maybe a 4% yield, which compared to Sydney yields is pretty good. And that's a gross yield. And if with the dual lock, with the 3 bedroom on one side and the 2 bedroom on the other, you would probably be looking more like a 5.5% yield.
Well, given our discussions on supply and demand, I think you're going to like our third and final story, Owen, and I'm going to be very curious to hear your thoughts. The headline is Housing Debate Heats Up. Radical measures are needed on housing supply, legendary finance journalist Alan Kohler has argued after speaking on a panel at a housing industry conference. Maybe communities and local councils can't get to decide anymore what happens in their suburbs, Kohler said during the panel discussion, according to a column he wrote in the ABC. Planning decisions should be taken over by a national body focused on housing supply rather than how each suburb looks, say the National Housing Supply and Affordability Council. Kohler pointed out that a planning expert told him afterwards that taking planning decisions off local councils would be a bad idea. However, the deputy chair of the National Housing Supply and Affordability Council, Marcus Spiller, who also participated on the panel, told Kohler there may have to be compulsory acquisition by governments of privately owned houses so large areas can be assembled for developers. So, Owen, Alan Kohler says the housing supply situation has become so dire that we need, quote, radical measures rather than mere improvements. Is he right or is he overreacting?
I think a lot of radical action needs to be taken. Whether this fits into a good idea and is probably a different thing. I don't necessarily agree with state or federal governments taking over this planning. I think councils, local government needs to have an overhaul and become a lot better at the approval process because they're simply shocking and contributing to the lack of supply in the market. But I think it's still important that local government has a say in what gets built in their local government area that would suit their specific community and the people that already live there, rather than some bureaucratic boffin in state parliament or employed by state parliament to make these sweeping decisions. And
let me push back against that.
Sure.
Surely the central bureaucrats in the state parliament, surely they are the only ones with a big picture view of the entire state's housing market. Someone at a local level doesn't know what's going on, and they're focused just on local interests. So don't we need someone at this central level to take a big picture view and make some decisions that the local people just can't make?
Well, the local government people can make decisions. They just seem incapable in the last decade or two to be able to make them and make them quickly. So that there's something culturally happening in local government that is making this problem worse. So but your point is correct that we need a big picture view of to be able to solve the bigger problem. But when you've got someone making decisions about a local area and a local community that just does not suit that local community. And yes, we still need progress. We still need change. And we don't want the NIMBYs being in charge. But progress needs to be considered at the same time to take into account the demographics of any local area and how much they want to retain those demographics, but take into account that change needs to happen all at the same time.
You made an interesting argument that radical measures are needed. However, that doesn't mean that any radical measure proposed should be adopted. And you pointed out that Kohler's particular radical measure would not be suitable. So then what radical measures do you think would be suitable?
Yes, well, there were, to draw an analogy, there were lots of radical measures taken in the 1990s in Venezuela. If anyone knows what the state of Venezuela today, we don't want to end up like that. And that's where some of the decisions that are being made at state and federal government level, sorry to say, they're sort of heading in that direction. And so we really need to maintain our democracy and have that freedom of individuals, and whether that's individual local government areas, to be able to make those decisions. So it's radical. I think it's the reform that needs to be made is how local governments are run in themselves. And that needs to be enforced upon them, and they need to have KPIs set by the state governments who do govern and control them, and they need to be held to account, not just being bulldozed by the state government and said, well, we're just going to take over and make decisions for you. Because that causes bigger problems in the long term on a political and society level.
Well, I don't know if the dictator of Venezuela, Nicolas Maduro, listens to the podcast, but if he does, he may have angrily cancelled his subscription. Some quite nasty things he said about him. I hope he gets over it soon. Interesting thoughts from you, Owen, as always. I had a feeling you were going to enjoy this discussion. What do you think of Marcus Spiller's idea for governments to compulsorily acquire houses so they can manufacture new land for developers to build apartment blocks on?
That's putting their money where their mouth is. And so I certainly don't have a problem with that. And, and that's one proactive way that, and of course, I assume we're talking about state or federal governments in this case. And if they do, then I think they should still need to work with local government to get the right type of development put in place. Part of the issue with what they're trying to push with these bigger governments pushing developments and larger developments is they're pushing a lot of these build-to-rent developments and schemes, which are funded by a lot of industry super funds, which of course a lot of them are controlled by unions. And where do most union members get employed? They get employed in large projects and large developments. So it seems like they're all trying to keep everyone employed, maybe push up the prices, push up the wages, and it's and that's not necessarily good for everyone and the economy as a whole, because it's not going to solve the problem we need. We need more houses. We need more individual builders to be in business. We don't need to put more power into large construction companies that bend to the whim of the large union movements, which effectively take control and hold hostage our construction and development.
Well, this has been a great chat. We've covered a lot of ground today. Home loans, rental supply, housing, communist dictatorships, all the big topics.
Yeah. It's you bring the news, and we'll discuss it.
Well, great to chat, Owen, and looking forward to more of your fire and brimstone next week.
Thank you, Nick, and I'll make sure I definitely bring it. Thanks, Nick.